If you are a forex trader, then there's high chances that you have come across the one, the supply and demand. Now, have you ever asked yourself what is supply and demand? Okay, now in this video what I'm just going to do is actually to explain right from the beginning what is supply and demand, how you can actually use it to your advantage to make more money in the forex market. And on that, I will just show you even how to identify this supply and demand zone in the price chart over there. And towards this the end of video, or maybe in the process of this video, I'll be showing you how actually the news, the government policies actually affect how they come in towards this we call the supply and demand. And towards the end of it, I'll maybe giving you a secret and good secret that will actually help you to make more money when it comes to supply and demand right over there. My name is Dan. If this is your first time to be over here, make sure that you subscribe, like this video, and actually share to your friends. We are going to start this video right after the intro and disclaimer of this video. Now, to understand more about the supply and demand, then I just actually have to take you a little back to the high school business class. Now, this is how actually it's just happened over here. I'm just going to draw something we call the supply and demand curves over here, so that actually we can just be in the same page to understand this. Now, there's something called the demand curve over here. So I just draw the demand curve around this area, and then I just call this quantity, or I can just call this demand, and over here, or I call this demand, and this I just call this price. Now, this is how actually you can just draw the demand curve. It is just drawn like this. Now, it's not like it's just drawn like this. It just happens in the market. I'll just explain later what it just means over there. Now, what can we see right over here? When there's actually high demand, when there's high demand is like when the price is actually low, then there's actually high demand over here. Assume this product in the market over there, the price is low, and something over here. So what will happen is actually people will start buying more of that product. That's why the demand actually rises over there, because the price is what? The price is low in the market, and now it creates something we call the demand. Okay, that is what you have to understand over here. Now, when it comes to supply, this is supply. On the supply curve, it is just drawn like this. And when actually we have the price being very high, then that is the time we actually have high supply into the market. Okay, people supply more the market when the price is actually low. The price is actually very high over there. How do these things affect the forex market? Because this is the same theory that is actually used by traders. It's something theory that is just used by big institution to trade over there into the market. Now, what will actually happen over here? The market will always try to bring something we call equilibrium over here, and this is how you see this is the demand curve. And you remember that we can't displace the demand. Okay, this is what we call the equilibrium point. So what will happen is that the government will actually always come with something we call the monetary policies over there to bring something we call the equilibrium to the market, especially when there's actually high supply to the market over there. When there's high supply to the market over there, then the high prices are there over here, and there's high supplies to the market. The government, the banks over there will come to a monetary policy that actually will try to bring equilibrium to that. And when there's high demand and actually there's a product over there, people are buying more over there, it creates something we call even inflation. And then the monetary policy is actually implemented over there to bring at least something we call the equilibrium point over there. That's balancing. Okay, and when we have all these things being formed, which we call the supply zone, demand zone over here, they create something we call the imbalance. So this is something that is created in the market when we talk about the supply and the demand zone right over here. Now, talking about this, when we just talk about this, let's just proceed this in the next level so that you can actually understand right over there. Now, after talking about that, then there's something else you have to know, and that is how actually to just identify this zone in the chart. Okay, let me just go to the chart over here so that we can try to identify this zone into the market. And when you talk about this supply and demand zone, there are lots of things you have to know, because you cannot only trend these only things right over here. Let me just show you something over here before we just proceed to the chart right over there. Now, there's something we call just like this, which is look at this. When the market is actually moving like this, and the market moves this way, this way, this way, and this way, and this way, you see, when actually you can see something like over here, the market was on the trend going up, and then there's something called over here the supply zone over here. You know, people are buying, and then the price actually shooting very high, and then this was a lot of supply right over here, and then the price actually started dropping right over here. Let me just show you something in the market so that you can just understand more on this chart. I'm just going to be using USD CHF over here into this chart right here. And you look at that, something that we call just like this. Now, how do you actually identify this zone? How do you identify this zone into the market? This is how you actually look at the market. And one of the advices that I'm just going to be giving you over here is actually to be using the highest time frame. Use high time frame. Why am we talking about using high time frame, like 1 day time frame, weekly time frame, least being 4 hour time frame? Is because these are the zone that actually can just be seen by high institutions over there. Is the zone that actually can be identified by big institution, the governments over there, the banks that can identify those zones. At the moment, for example, they identify these actually the demand zone that are actually being formed somewhere. What they're just going to do is actually try to enter from that zone, and they're just going to be buying a lot from that zone. Now, what happened when this zone actually been created into the market right over here? For example, when we have something just like this, you can see it is being tested so many times. And when we talk about the demand, is actually when the zone is actually being tested. You know, when the market reaches to another level, it gets resistant over there, whether it's supported over there. When it comes to support over here, like a demand zone over here, you can see the market tries to reach around this area, and then it's just supporting around this area. It tries again, is supporting at this area, and that is what we actually come up with something we call the demand zone right over here. If you can see the market, if you go to 1 day time frame over here, you see something else over here. Let's just go to around 1 month, okay, around 1 month here, you will see something else like this. You see something else like this. So if there's something else that to actually work into the market, then this is it. So as you can see at this region, this was something that was tested across that area. The market tested this region across this area, and that's why we have the market trying to reverse across this region over here. So you can see we have something else here across here, across this area. So this region was tested actually. Let's see, I want to cross it to this area. So you can see that this one. So this forms a very nice one demand zone over here. Okay, now that is a highest time frame over here. Let's just concentrate more on 1 day time frame, because even 1 day time frame, it's just work over there. So it can actually work for you if you are looking maybe to trend daily right over here. So if you just look keenly on this one, we have this place over here, and you can see the candlesticks actually being touching around this region, and the market going down, trying to go up and coming over here and get supported at this region over here. Now this region is what we call the demand zone. Okay, and now to support on these, what you actually have to do is something else that I'm going to reveal right over here, to combine it, to make sure that this is actually being a very nice demand zone over here. There are two things that you actually can just do right over here. First of all is actually to combine with another indicator right over here. Like you can see, we have RSI that I've just used over here. RSI is another relative strength index that I've used over here, and when the market reached right over here, because this is where place actually gave a signal, is that you can see the market indicate that is actually oversold here. The market is oversold, and what is just oversold here is the US dollar is actually oversold around this area, and now it is actually the time now to enter into the market and now buy over here. And you can see now this is another indicator. It's telling us this market is all oversold, and now we are ready to actually just go upward just like this, and that is another indicator over here. So you can see at this region we have demand zone. You have identified over here, you have tried to use another indicator over here, and it's actually showing you the same thing over here. Now let's just go to the price action to see whether the price action was be supporting the demand and the supply zone, the demand and the supply over here. Now when I actually go to price action, like when I try to use indicators right here, let me remove this. Let me remove this. Forget about Fibonacci's. Now what we can see right over here in 1 day time frame is this resistance and support area that was created around here. So you can see how this market was moving. The market was moving so nicely over here. The market has been moving so well. You can see how the market is just moving this way. Let me just draw something here so that you can see. And this market was actually moving like this. The market was moving this way, touched here, okay, touched here, and then jumped right here, clicked right here, touched here, and then touched this one. So another indication that this is the right place to enter is actually the trend line that we've just been using over here, and you can see this line has been respected so many times right here, which is here, here, here 3 times, and this being the 4th time, which is makes it to be a very valid 20 times over here. And the moment actually you just zoom over here, you see some supply and demand zone being created around that region, and that gives us a very perfect example for us actually to enter into this market. Look at how this price actually was being tested anytime the market was actually trying to come up over there. So you can see another region that I've been testing across this region is this point here, creating a supply zone around that area. Let me just look at another. So there's something you are learning here is that you cannot actually use these things alone. You need something else over here. So the other zone that you can see, you know, there are those small zone over here in the that can be created like the ones I've just showed you, and there's something else like this. So you can see this a very good demand zone that was created over here. Anytime the market was actually touching around this area, the market actually was just going up over here. But you know, this zone actually are there always to be broken, and you can see the moment the market actually touched this reversed back, touch this, reversed, touch this, reversed, this, reversed. At the moment you actually detach too many times right here at reversed, now it is the time now it actually broke that and now changed the character. Now that is what we call over here the change of character. You can see we have a supply zone that was formed across that region over here. This is what the market was touching over here. So when we talk about the supply and demand zone, we are talking about the zone and not a specific point like resistance and support area. This is different because you can see like this, we have something just like this. This is a region that has been formed around this area, and this makes it to be the supply. Okay, where the market, you can see how it actually just prove this, because it's just very simple. Over here where the market actually touched around this area over here, you can see the market actually was overbought. When you just to combine with another indicator, the market was overbought over here. When the market was actually around this region here, the market was almost overbought, touching 70 right here, almost there. And those are the things that you have to know over there in the market. So to identify this on just a look at how the market has just been accumulating at the same point over there, there's something people of those who use smart money concept talks about, and they talk about them blocks where the market, let me just show you something here. How there are some people talk about where the market, like when the market moves like this, then the market actually forms something like this before going up, and this is what we call the accumulation. And when this one is actually formed at the top before the market drops on the supply, we can just call it the distribution. So I think I will normally see that it's just the same concept of the supply and demand zone. It's only that this actually there is accumulation towards after the market is actually uptrended over here, after the uptrend of the market, then that is when we see the market actually accumulating up or accumulating down over there, and then before the market just reverses back. So that is what we can just talk about over here. What else can you do over here to combine all these things that you just see over here in the market? Talking of which, for example, we have seen where the government, for example, let's see the monetary policy where it actually comes over here. Now, when we see something rising like this at that point over here where the market actually comes over here, this being the supply zone over here, and then this price just goes up. Remember, this is USD Swiss franc over here. Remember, this is where the dollar actually just gets stronger. And what we just do over here, the monetary policy that we actually implement over here is like cutting interest rate and doing all that things, and then the supply actually will just reduce right over here. Okay, and the people will start buying more things in the market, and then they will just cut the supply. So let's talk about something else, what we call the demand zone. How do you really combine over here? So let's talk about something else. Assume now there is a demand into the market. Okay, assume now there is a demand into the market. The demand zone has actually been created over here for the dollar, and this is where most people actually will come to buy. Okay, this is where so many people will come now to buy something like the dollar over here. So what will to come over here to happen here is the government will actually try to put something we call like the monetary policy, where they can actually decide to increase the interest rate. So when they actually increase the interest rate, you know, the dollar will actually start gaining demand over there. People actually start having those demands over here for the dollar, and then you actually see the dollar gaining the strength. Let me just explain those so that they cannot confuse you over here into the market. Okay, so how do you know that it's time maybe to buy, and you just combine this with the news? when the market actually comes right over here, you have identified all those things, and then you actually hear there's some news coming up. The inflation are actually just going up, which is a positive thing because they indicate the interest rate can actually be increased over there. Then it is an indication that this is actually a real demand zone, and now it is the time to buy in the market. Now you have understood one thing is that you have to understand is that you have to combine with the other indicators price action for you to be more better in these things. So I hope that has been simple for you as I've tried to help you to understand this, and I hope maybe next time if you have any question concerning this, then I'll just be explaining further what is supply and demand zone. And make sure that you don't use this alone when you are actually trading into the market. Combine with the other indicators, combine with the price action, and actually be following all the news to know what is coming and how it actually affect your trends there in the market. See you next time. Bye bye.